George of the jungle.
Well, here we are back again with another update on the forbearance issue that is now affecting comfortably over 6% of every single mortgage that is outstanding in the United States. That's what we're going to be discussing today in thecreditjungle.com. This is George Anderson. And since March 17th, when the Federal Housing Finance Administration first announced that there would be a forbearance program for people who were laid off due to COVID-19, the spectrum on 6 releases since that time has ranged from starting out with, hey, it's a free vacation, you don't have to make your mortgage payment for a year, no consequence, to, okay, this is going to be really bad and nobody's going to be able to buy a home until after they are brought current and they've been paying for 12 months. Like all things, the pendulum swings a little bit and it starts settling in the middle. So the announcement that came out on May 19th says that borrowers are eligible to refinance to buy a new home if they are current on their mortgage. In other words, some people requested a forbearance, but they still made the payments. So I don't know how that's a forbearance. So I guess they've just kind of like threw up the little caution flag to the lender and let them know that they might be doing that. But for those who actually did skip payments and have not been making their payments under a forbearance program, it says that those borrowers are eligible to refinance or buy a new home 3 months after their forbearance ends, and they have made 3 consecutive payments under the repayment plan, a payment deferral option, or loan modification. So the word current now has changed from being able to bring current all of the arrears, okay, which does not happen in a Chapter 13, and we discussed that in a previous video. But it means that if during that forbearance they worked out some sort of a deferral payment, a loan modification, or some sort of a repayment plan, and then now the forbearance has ended and that repayment plan, modification, or whatever it has started, and under that new agreement they have made 3 consecutive payments, that they are not going to be put into the penalty box because of that. They're going to be eligible to be able to purchase or to refinance. Now, before we get too excited about it, I'm still very anxious to see how this is going to be reported to the credit bureaus. There's not a lot of real clear guidance on that. At first, it was seemed that there would be nothing reported at all, but we're just going to have to wait and see what happens on that front, because somebody with an acceptable payment history based on the underwriting guidelines is still going to have to meet the credit score requirements, which now, at least temporarily, have been raised up anywhere from 20 to 40 points above where they were prior to the whole pandemic coming out. So interesting little piece of information here, but hopefully that allows a lot of people who have seriously been hurt, have lost income due to no circumstances or fault of their own, that they are still going to be allowed to play in the housing market, to be able to refinance if they want to stay in their home, take advantage of those lower rates, or if they want to sell, they get transferred with their employment or whatever, and they need to sell and buy another home, they're going to be taken care of as well. To find out how this might be affecting you personally, remember you can push button, get mortgage professional. This is George Anderson, and I would love to talk with you soon. Have a great day.